evening, all. Ira Epstein, and here we are with your financial market wrap-up for Tuesday, the 28th of December, 2021, about 6:20 p.m. We had our first measurable snowfall in Chicago. I'm applauding it, as are most of us that live here. It's been 288 days or so since we had snow that's measurable in Chicago. We like our snow, not a heavy one, but it's pretty. It's fun to have. It's already gone because it started raining and everything right after that. And we're getting lots of weird temperature, be it in Texas, be it down south. We're breaking records for warmth in many parts of the country. Hard to believe, but that's how it's working. The good news is the snowpacks in the west, they're getting plenty of snow. Maybe that helps break the drought. You need years of this to get the lakes back full and the dam areas, but it's a beginning. You can see gold slipping along with silver tonight up in the stock market. Now, I expected pressure today in most stock indices, and I got what I was looking for. They weren't running to the upside. They were, after the early morning, they were more on the defensive, with some being lower on the day, simply because a stellar Monday often leads to a pullback Tuesday. You're up nicely right now, as you can see in the energies. They're doing very well. You're up a little bit in the bonds and notes. They acted poor going into the close. They've come back a little bit. The dollar can be a surprise to the upside here. The chart pattern acts like it wants to get bullish again. I think today's low is going to be the key to the market right through the year end. If that's not taken out, I think you're going to get that at least push to the upside. Now, in the S&P, how do you argue this? You're up 1.5% for the week. This is into now early Wednesday trade, new all-time high. When you take a look at the daily charts, you can see that you're there as well. And when you put this on the chart, you can see that you've just run to the upside. Now, this is what I call a vertical price rise. It occurs that out of nowhere, on a break, the market starts going up and every day makes a higher high, not even giving the traders that would want to buy a pullback an opportunity. That's why I call it a vertical price rise. It occurred in this case when the market was over the 200, the 100, and the 18-day moving average of closes, and where it often runs into resistance, because all these averages are underneath the market, is at the upper Bollinger Band, and you're there right now. So that's just a typical thing that happens. From there, the market starts fighting, and the question is, and here's the question, does it get the strength out of this to embed when you get the red and the blue lines going sideways over 80 for several days or more, which sets up, if you've taken my enhanced Bollinger Band course, a whole certain type of trades, or does it just get overbought here, begging to correct a bit? That's what we have to wait and see. The NASDAQ did the same. As you can see, the NASDAQ today finished the day down 72 points. I'm going to come back here. And you can see you finished in this market down 3.75 in the S&P. I was looking for a pullback, and I was looking for it because of the big gains, as I mentioned to you, that occurred in these markets on Monday. Now, as we take a look at the rest of the indices, these are different ones because they're having trouble getting to their all-time highs. That's number one. You can see that in the Dow. Keep your eye on this embedded part. If it can build, we're going to get excited for that first surge right into the new year. I told you I expect massive resistance, and that's the word I want to use. The 200-day, the 100, and the upper Bollinger Band and the Russell, and that's exactly what you're running into here, and you are overbought. Now, the news, as I'm interpreting it, because you keep dropping in the VIX, is the pullback is just a pullback. It's not a change of anything. If this wants to stay bearish and start dropping, you're going to kick up the stock indices, just the way the two work together. You'd have to take some of the steam out of this market that wants to build to the downside. 1941, you have embedded. Day 1, 2, 3. You got a fully embedded set of readings now. So what does that mean? It means to me the pros are going to sell this market into that resistance, looking to see if they can drive it down further, which is bullish in the stock indices. In the bond market, the trend is down. Lower highs, lower lows, oversold. First step tonight where both numbers are under 20. You see that? They weren't that way on the close Tuesday, but tonight they're both there. Okay, First step. What about the 10-year notes? Lower highs, lower lows, momentum still pointing down, not trying to embed. The resistance is right here against the 18-day average of closes. If it can break, I'll be looking for the 133.01 level. I admit one thing. As you look at these charts, you have to understand, now you've got 3 trading days left this year. A lot of people won't even bother with Friday, although it's a full trading day in most futures markets. But, people just turn mentally off. I'm going away, they say. It's New Year's. I don't have to worry about Monday trade. I'll be back Tuesday. And they're on vacation in their mind. Volume's already there in a number of these markets. Here's the dollar index. It had an outside day up. If we come to yesterday, yesterday's high was 96.24.5 to 96.03. Today you took out both numbers, you closed higher. Now the key is to get up and over this 18-day average and stay there. Then you put into play the possibility of getting back to the upper Bollinger Band. What you don't want to see to have that go is you don't want to take out today's low. If today's low is taken out on Wednesday or Thursday, then I think you're going right down to the lower Bollinger Band. So some interesting setups in the dollar index. Nothing out of the euro I can make heads or tails of. It's just drifting on the 18-day average, caught in the Bollinger Bands with flat momentum. The British pound ahead of itself, very much ahead of itself. It's got itself well over the upper Bollinger Band. It's a market begging, I think, for a pullback. In Bitcoin, boy, you talk about a market that failed. This is a classic failure. First off, this is a rally that was set up when you lost the embedded reading. Here comes the rally. Okay, now you got really stiff resistance between the 18-day average of close to the green, the 100-day. And what did the market decide to do? It decided to say, I don't want to be that bullish. It completely stepped out of anything to the upside. Could it drop here? It could, and that would give you 45,250 level as a target. The differential continues to narrow between the WTI and the Brent crude. Now the difference is $1. We started off here at a much higher number than that, but that's where it seems to want to stay. Okay. And I think the energies are overbought, but trying to embed. You see that? So if they embed, you can't count today, but here's day 1, day 2, not the day before. So if they embed, that tells me on these pullbacks, this area, the 74.21 18-day average to 75.08. That's going to be a number professionals look at like this. Their eyes will open up and they go, I want to own it there. And I think that's what will happen. They won't even worry about that stop. They'll worry about keeping the embedded reading. Is it the same play in WTI? It's even sooner. You can't count tonight, but you can count Tuesday, both numbers over 80, both numbers over 80 on Monday. Tomorrow's the day. So if they can do that, then I think it's the same game plan. So I'm friendly, the energies here, and I'm getting excited because this type of setup often is fun. That's the right word I want to use for that. What about some of the products? Getting there too. It's the same setup on everything. You can see that. Not nat gas. Nat gas is this. Just waving. I told you I thought it was going to just develop sideways action on those Bollinger Bands. I haven't altered my thinking at all, and I'll cover that in the morning. Now, don't go away. Let me just tell you one of the things I love to do. I'm up early. I'm up 3:34 in the morning typically, reading in bed, and then all of a sudden I jump out, and I get my coffee, sit down I've got a whole studio in my home. And it's not a little room. It's a big room. It's a nice studio here. And I start laying out for you chart patterns, talking about them. So I start recording videos. I typically start 5:30, 5:40 in the morning on my futures. It's posted. It's ready about 6:15 a.m. I want to be the guy before that 7:30, 8 o'clock time frame where people wake up all over the world and they say, I want to start trading. You remember, at 5:30 here, it's 3:30 in LA. There aren't a lot of traders up there. But they start waking up and they want to look. I want to be the guy you look at. I want to be the guy you say, what? Here's the quotes. Look at that chart action. What does Ira think about that? That's the guy I want to be. It's not expensive. I'm not going to do it for free. You don't go to your doctor for free. I'm not going to be for free. But for $7.95 for 24 videos, each on average 18 to 20 minutes long, I make it easy because on the bottom there's a scroll bar and you just pull that. And as you pull it, it's going to light up in big letters. I'm in the grain section, I'm in the meats, I'm in the financial, I'm in the bonds. What section do you want to be in there? Plus, I'm going to cover for you weekly charts and daily charts. It's a lot. How do you get it? Just go to our website, www.iraepstein.com. You'll see in the very top the word research. It's all explained there. It's simple. I think you'll have a ball with it. And, you know, New Year's coming. You want to set some right things that you do. I hope. That's all I can say. I'm hoping that I'm one of those right things that you say, you know something? That makes sense. I want to see what this does. Let me take a look. Here's how you do it. IraEpstein.com under the word research. Have a good day.